Edward Brown, host of the Best of Investing, here to remind you to tune in this week on Saturday at 8 p.m. Our guest is going to be R.J. Burr. You're not going to want to miss this show. That's the Best of Investing on Saturday at 8 p.m. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during the show. That certificate's not sponsored by the radio station, but by Tambella Tanning Salon, with 2 locations in San Francisco and 1 in Marin, and it is worth about $100, so it's a nice little gift that we're giving away. Today's trivia theme is movie trivia. That ought to be kind of fun. Do want to talk a little bit before we introduce our guest to Pacific Private Money. They came out with a fund called the Arrival Fund. And believe it or not, it's paying 10%. And it's backed by first deeds of trust that are being put in the fund, and then they're getting sold out to a buyer. And then the money comes back in, and this just keeps repeating, wash, rinse, repeat. And it is for a limited time only, because once they hit a certain amount, I don't know how much they're trying to raise in this, could be 5 million, could be 10 million, but a fair amount of money's pouring in. They're going to cut it off. So check them out at pacificprivatemoney.com. Tell them that you heard it on The Best of Investing to find out more details. You do have to be an accredited investor, so you have to have a net worth of at least $1 million exclusive of your home, or you have to have income of $200,000 if you're single, $300,000 if you're married. Any one of those will qualify. So again, they're paying 10% on their new fund, which is called the Arrival Fund, pacificprivatemoney.com. And one quick thing here also, a judge in Delaware says that Elon Musk is not allowed to his compensation package, which was approved by 77% of shareholders. And I'm wondering, why do judges get to decide in a free market? I don't get it. But anyway, we're going to introduce our guest. Maybe he'll have some comments on this. Anthony Greer goes by Tony Greer, and let's see here. This company is TG Macro, and let's see here. The name of this episode is the Accountable Tactical Trading. A little bio here on Tony. After graduating from Cornell University in 1990, Tony began his trading career in the foreign exchange market for Sumitomo Bank and Union Bank of Switzerland, where he started running large bank books. He joined the J. Aron division of Goldman Sachs in 1994, where he learned the rigor of risk management in trading gold and the Goldman Sachs Commodity Index. Tony left the commodity desk at Goldman Sachs to launch his equity trading operation in 2000, surfing the .com crash for 2 years. Tony then began a career in equity sales in varying capacities, and in 2016, Tony launched the Morning Navigator, a macro trading newsletter distributed to over 800 professionals worldwide. Hey, Tony, welcome to the Best of Investing. How are you?
I'm great, Edward. Thank you so much for having me on.
No, good. The audience can't see, but the YouTubers will be able to see when we post this to YouTube. Love that big screen of yours. I've got like 2 mini big screens, but I love that one. That probably helps you in your trading, doesn't it?
Yeah. This is a great addition to the trading sort of arsenal. It used to be 4 separate screens, so 2 and 2, and I was kind of looking all over the place. And this kind of puts it in one, sort of dashboard for you.
Yeah, and you can kind of move it around and keep it all on one. I get it. I find my son finally convinced me to get one of those, and I thought, yep, that's what I want here.
Let him talk you into it.
Yeah, we are going to go to a quick break. When we come back, we do have some pretty cool stuff to talk to you about with interest rates and commodities. Commodities are kind of a big deal nowadays, especially with oil and all the stuff that's going on in the world. So we definitely want to get your take on that. All right, so here's our first trivia question. And just as a reminder, Tony, if you know the answer, don't say anything until we get right back from break. Who was noted for his cameo walk-ons in his own films? All right, call 888-912-1190. The first caller with the correct answer wins that tanning certificate, which is worth $100 or more, actually. Our first trivia question: who was noted for his cameo walk-ons in his own films? Mostly, we know him as a director. And Tony's raising his hand, so he knows the answer. We're going to let him answer when we get back from break. Audience, don't touch that dial. The Best of Investing will be right back. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my special guest, Tony Greer. Our first trivia question. We're talking movies here. Who was noted for his cameo walk-ons in his own films? Tony?
Was it Alfred Hitchcock?
It was Alfred Hitchcock. Yeah, I asked the same question on my sports show, and nobody knew the answer to that one. So far, you are 1 for 1. All right.
Yeah.
So Tony, you were involved quite a lot in commodities. Was it mostly gold that you were dealing with, or?
Well, I traded the gold book at Goldman Sachs, the actual gold futures and bullion and futures and options and bullion book. And I also traded what's the product that's called the Goldman Sachs Commodities Index, which is a basket of 22 commodities.
Wow. that must have been very minute by minute excitement.
Yeah, that was an intense job. Managing the risk of 22 commodities at once via an index is a big boy trading job.
Yeah.
And, it's good because it gets you a little bit of an education across the entire commodity spectrum and really keeps you on your toes in terms of, the markets and the spreads that are in play, because you have not only just your spot price risk, but you have calendar risk when you're running a book like that also, when you have a futures curve and things like that. So it can be tricky. It can definitely be tricky, but it was literally like, I called it Navy SEAL training in commodities at the time. It was really intense and really, really awesome.
Wow. Well, tell us a little bit about TJ Macro. That's your company, right?
Yeah. Yeah. So I started TG Macro basically from the idea that I wanted to formalize the note that I was writing to my clients every day. So I started off writing about markets when I was at Goldman Sachs in the 90s. I kept a journal. I kept a journal from then about what was going on in the markets and kind of measured things the way a futures trader looks at the world. Then when I got to the sell side in equities, I started writing a note that was very much the same way of keeping track of markets, but I was keeping my first few clients informed about what I thought was going on in the world. And it started off as an email that went to one client, and it grew organically to a list of about 1,000 people, all through just hearsay, like you should be on this guy's mailing list, get on this guy's blast list. And when I had over 1,000 subscribers, I decided to sort of, rip the Band-Aid off and go out on my own and try to make that a standalone product. And knock on wood, after launching the day before Election Day in 2016, I wrote a note, my first navigator, that said Donald Trump was about to win the next election in a huge margin and the world was going to change dramatically. So I got what I was looking for, and thank God, I just started my 9th volume of the Navigator, my 9th year in November, which is exciting. And, it's my way of sort of saying good morning to a world of traders every day and trying to teach them where to look in the markets for opportunity, trade ideas, and investments and things like that.
So you're mostly, your clients are going to be the professional traders.
My clients are all portfolio managers, wealth managers, family offices, individual traders, execution traders at banks, things like that, day traders, all different kinds of people that are looking to make money. That's essentially what I'm trying to do. I run a live P&L where I show people what I'm buying and selling and when, and sort of give recommendations and keep track on a spreadsheet right in front of them. So they find that valuable, as a tool to follow along with a real trader, and they enjoy the way that I keep them up on the world because it's kind of fun to read.
Yeah. So you just do your own research and then just share it with your clients?
Well, yeah, I have a very specific way of following the markets, Ed, that I started a long time ago. And it really stems from a spreadsheet where I monitor the weekly, monthly, quarterly, and annual performance of a list of about 35 securities. And they include US stock indices, bond market measurements, the yield curve, the entire commodity board, and about 15 or 20 equity market ETFs that I follow. And so from following all of these sectors of the market and areas of the market on that very careful weekly close basis, monthly close, quarterly close, it really illustrates what's going on in the world. So when you write about them on a 3 times a week basis, like I do, I'm often referencing, what's performing on the week, on the month, what are the names and sectors that you should be in if you're trying to go with the markets. That's always something that I'm trying to preach to people, because I learned a long time ago that trading isn't about creating your view of the world and putting risk on. Trading is about having the world tell you and show you what is going on, and you figuring out how to participate in that.
It reminds me when we were selling our old house. The stager came in and wanted to do a whole bunch of stuff, and my wife was like, "Well, wait a minute, what the colors? I don't get it, And I said, "Sweetie, we're moving. We don't care if she says paint the place pink with green polka dots and it'll sell quickly. That's what it is. We're not going to live here anymore, So I get that. We're going to go to a break in a minute. What do you charge your clients to be part of your team?
The annual. I have one annual membership that is $800 per year.
Oh, that's pretty reasonable for all that. Okay, tell you what, we're going to go to our second commercial break here. Do want to make a mention also for the Transcendence Theater Broadway shows December 18th and 19th at the Sebastiani Theater in Sonoma. Check them out at bestnightever.org. And due to popular demand, they may just add some more shows. All right, here's our second trivia question on movies. Who played the monster in the 1931 film Frankenstein? Call 888-912-1190. First caller with the correct answer wins that tanning certificate. Again, here's the trivia question. Who played the monster in the 1931 film Frankenstein? Don't touch that dial. The Best of Investing will be right back. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with my special guest, Tony Greer of TG Macro. All right, our second trivia question. Who played the monster in the 1931 film Frankenstein? It's the same guy who also played Dracula, Boris Karloff. Yeah. Going back 1931, gosh, that's 93 years ago. Wow.
Yeah.
Do want to make a quick mention also here for Mountain Mike's Pizza in San Rafael. Pizza the way it ought to be. Check them out. We just got some pizza last week, right after Thanksgiving, and it was phenomenal. Mountain Mike's Pizza in San Rafael. All right. So, Tony, where do you get your research from?
I don't really, there are a few people in the markets that I read religiously, and that's really it. They're all individual content providers like me, and I would say I read precisely zero street research if possible. I only read the research of people that are individual, unbiased, uncorrupted, and uninfluenced analysts.
And if it hits the street, it's like it's public information already. So I get that. For your clients, generally, is there any kind of target rate of return that they're shooting for? Because there's going to be winners,
Yeah, there's winners and losers, and it's very much the return on the portfolios that I create.
Yeah.
And there's one thing that I try to emphasize to everybody that subscribes is that I'm a trader first. I started off as a trader, became an analyst by virtue of using my own methods to follow the markets, if that's fair. And, I present that research to my clients as a way of showing them how I'm looking at the world. And, that is generally, it's not as, the portfolio I create isn't set up to give a yield like a bond or something like that. It's very much sort of what it is trying to run up the scoreboard on tactical trading, quite honestly. Like I'm trying to be in the assets that are moving, the ones that are rallying.
Yeah.
We jumped on a lot of the Trump trades in October as they were presenting themselves. Software broke out in the beginning of October, and we jumped on that trade. Bitcoin broke out at the end of October, and we jumped on that trade as it looked like President Trump was going to get reelected again. We've been long the S&P since November of last year, and I'm still a raging bull. So those are the trades. I get into trades with.
I was gonna say I didn't know that Trump was like really into crypto until like he mentioned it like after. I didn't realize that.
Yeah, really big supporter of it. And there's actually a deeper story where the government is going to want to bring on crypto trading as a means to help them regulate the bond market,
Of course.
believe it or not. And it's a very, very high level look at how they're going to do that. So high that I probably can't enunciate it, but you want to go to somebody like Luke Gromen, who's got that trade under his thumb and how that's going to work, et cetera, et cetera.
Wow. Yeah, I remember like when I was 20 years old, I used to do a lot of options trading. And I was actually pretty good at it. I made one nice little killing, and then after that, unfortunately, you sort of think you know it all, and so I found out I didn't know it all.
Well, I have a saying with my clients in options. My guidance in options is always look at whatever option you want to buy, price it up, and then slam your hand in the drawer rather than buying the option, because that will go better.
I know. I still remember one trade. I did a spread, and I had too much going on, so I wasn't really thinking straight because I was up. $3,000 in 1982 was a lot of money, right? And I realized that the very most I was going to make was going to be like 5,000 because of the spread, and I didn't think about. You know what? I was starting to hit almost the $4,000 mark at some point. And I go, I should have sold because it's like, why should I go for the whole thing? I wasn't going to get the whole thing anyway. But again, I was so busy with work and all this stuff, I didn't think. And of course, it went to zero. So let me ask you let me see, what are the current risks that you see in the stock and bond markets right now?
So I see the risk in the market as, if the Fed has pivoted to a dovish posture of easing, perhaps immaturely or perhaps in error, where they go ahead and create another round of inflation. Obviously, one of the big trades out there is that we've got a runaway deficit, we've got massive debt issues. You can see the deterioration of fiat currency happening right before your eyes every day as gold and Bitcoin and and other dollar denominated assets rally sharply. So that's sort of the trade that is highlighting, where if headline inflation creeps back into the picture, the bond market's not going to like it, right?
Yeah.
Rates are going to have to go higher to address the inflation again. And if you remember 2022, that was the sort of siren alarm for the stock market that caused all these downside slides. Whenever we got a dislocation lower in treasuries due to an inflation print, the equity market did not like it. You'd see the VIX respond with a big rally, stocks would sell off, and then you'd have to sort of sort out the rotation at the bottom and figure it out. So,
all right, Tony, tell you what, we ran out of time for our trivia question. We'll ask it on the next go around. That's okay. No problem. All right, audience, stay with us. The Best of Investing will be right back. Don't touch that dial. Welcome back to the Best of Investing. I'm Edward Brown, along with my special guest, Tony Greer. We'll ask the next trivia question next time at the break. The question I wanted to ask you now is, what long-term investments do you hold, and what do you see for the future?
I'm bullish the stock market, Ed. I don't have a problem being optimistic up here, especially with the sort of, massive change that President Trump looks like he's about to implement. The danger is that he was very good for the stock market last time he was in office, and that everybody piles in here, and that he does some things that maybe aren't as bullish as he did in the first administration, right? He's got a lot of different appointments with very serious agendas, right? Robert Kennedy Jr. is going to take on the big food and big pharma industry. We're going to probably reconfigure our entire energy platform with the appointment of Chris Wright. We've got Scott Bessent in the Treasury who says that he wants to grow our way out of this massive fiscal deficit that we have. So there are a lot of situations at play here, but when we're in the era, I feel like we're still in the early innings of artificial intelligence, of the pivot to nuclear generated baseload power. The death of DEI, the death of globalism. I mean, the world is changing dramatically right now. So that's why I can stay bullish the stock market. As long as the bond market is under control and not flipping out due to inflationary pressures, I can stay bullish stocks. So if you had me on again and there was inflation in the picture, I'd say be careful out there.
Gotcha. Yeah, because I think this whole thing about, everyone's getting all scared about tariffs, thinking that it's going to be inflation, but I think you're going to get those countries to back down. He'll get.
Couldn't agree more. Yeah. Couldn't agree more.
Yeah, I mean, I like the idea of slashing the government. I mean, that you can, rather than spend your way out of it, I like it. You grow your way out, and then just spend less. That totally makes sense. I'm just hoping that he's going to be able to get his appointments through, because there's a lot of flack from people who have a different agenda. They'd rather see the government go to, the United States, America last is what their attitude is. In fact, I've said this before in the show. There was a Democrat senator years ago, and his attitude, he was very clear about it. He says, I don't care if it destroys the economy as long as the rich pay taxes. And it's like, you tax the rich. And it's like, I mean, that is the stupidest thing in the world. And
yeah, that doesn't sound like the best.
One of his tax policies, I'm hoping, is that he reduces capital gains down to like 9%. And he only has to do it for a year or two, and you can really eat into that. I don't know. All the liberals will be upset because now, see, you're giving the rich tax breaks. But it's like, I don't care that Elon Musk makes an extra $500 billion. If I'm better for it, that's okay. I'm not envious of him. Which kind of brings me to the part that I brought to you before, which was this. I don't know if you probably heard about, he was getting some massive compensation from Tesla, right? Which a lot of these guys, forget him for a minute, but a lot of, startup type companies, they get $1 a year, but they get a lot of stock. And if the stock does well and the company does well, I mean, they should be rewarded for it. But son of a gun, if this judge says, no, this $100 billion that you're entitled to, no, because you didn't, and apparently she said it was because you didn't, you had the board of directors rather than the shareholders decide. So they said, okay, well, let's put it back to the shareholders. And 77% of the shareholders said, yeah, he earned it, give it to him. And the judge still said, nope, too late. I think that was not a Trump-appointed judge.
No, probably not.
I wish all these people who are liberal would just basically, go to Cuba, go to Russia. You want to live in that kind of country? Don't change my country. Just go live in a country that you're already aligned with. And that's
sobering to hear this coming from the West Coast, Ed. I love it.
Isn't that amazing? I do go by Edward. You go by Tony, right? Not Anthony?
Yeah.
Okay. Again, I'm an Edward, not an Ed, but yeah, I know I'm like one of the few people in California who's. No, I wouldn't say that, because apparently there's been a bigger red wave in California than there used to be.
Is I think that right? I'll bet there is.
Yeah,
it feels like the pendulum is swinging to the limits as far as it can, kind of thing.
It is, but unfortunately, where I live in the Bay Area, specifically in Marin, they say, like, we never met a tax we didn't like. And it's so stupid, because my main thing is, where's all that money going? At least if I could see it going, oh, well, you're building new roads, or you're doing this or that. But it always seems to go for pensions. And, we have a water district here where, we got to raise water rates because, there's not enough water. Right. And it's a scarcity. And then when we have a deluge and we have more water than we can do anything with it, they still have to raise prices. Explain that one to me, Lucy. I don't understand.
Yeah. That's wild.
Hey, you know what? I got a funny, silly joke of the week before we go to our break. How's that? Okay, so this guy walks by a pet shop and he sees a sign that says "talking dog" for $5. So he goes, I got to check this out. So he goes in there. He says, well, you got this dog that talks for $5? You're selling him for $5? And he goes, yeah. He goes, here, go ask him. All right, dog, can you talk? He goes, oh yeah, listen, I skied the Alps last year, and then next year I'm going to go up to Mount Fuji, and then one day I'm going to be an astronaut, and blah. He starts going on. The guy goes, oh my God, I can't believe this. He goes to the pet owner. He says, I don't get it. What? Pet shop owner. He says, why are you only selling them for $5? A talking dog. He goes, yeah, because he's a liar. He never did any of that stuff. All right.
Nice.
Here's our last trivia question. Okay, trivia question is, who co-starred with Elizabeth Taylor in the movie Cleopatra? You know what this? You got this one. Okay, Tony, you'll get to do it when we get back. Again, we want to make another mention here for Pacific Private Money. Check them out. They have a few different funds paying anywhere from 8 to 10%. Their latest one is called the Arrival Fund. I personally just recently invested myself, so take that for what it's worth. And I think if you check it out, you'll like what they have to offer. PacificPrivateMoney.com. Stay with us. You're listening to the Best of Investing. Don't touch that dial. We'll be back with some closing comments. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with my special guest, Tony Greer, who seems to know a lot about commodities, that's for sure. All right, our third trivia question, who co-starred with Elizabeth Taylor in the movie Cleopatra? Tony, what's the answer?
It had to be Richard Burton.
It had to be Richard Burton. That's pretty good. You got 2 out of 3. That'll definitely get you in the Hall of Fame.
Showing my age.
That's okay. Well, you didn't know the Boris Karloff one. That was 1931, so that's okay.
Well, I'm not 100 years old.
That's okay. I look good for a man at 85. Okay, so what do you want to cover in the last just about 2-3 minutes here?
I think just that maybe if you don't mind, I would give a shout out to. I do a podcast called the Macro Dirt Podcast with Jared Dillian, and it's really growing rapidly. And we cover a lot of the commodity talk in depth in that podcast, and that might be something that's interested to you and your listeners. So just another, deeper dive into what's going on in the market. So that's a part of my business that's been thriving, knock on wood, and I've been really, really enjoying. To pivot to the markets, I would say that the most important thing, I think, is to have your eyes wide open at the changes that are taking place in the world, because I think that a lot of them are first or second inning of what's going on, including AI, including the nuclear power for data center power generation. We saw Amazon first, Google second. Now, just last week, Meta said that they're pairing with they're trying to set up small modular reactors to generate base load power for their data centers and things like that. So these are like new headlines that remind me of the .com bubble, but before the bubble blew up, right? Like there are new headlines about the internet and about hardware and networking, and this is the same environment.
Yeah,
so I just caution.
Though, because back then, for the dot bomb, as we call it now, is the fact that a lot of venture capital was going into stuff that had no value at all. This has got actually a lot of value. So I'm hoping it'll be good. Why don't you go ahead and let people know how to get a hold of you if they want to sign up for your newsletter?
Sure. And thank you very much. You can go to my website at tgmacro.com. There are samples of my newsletter on there. I don't have trials, but I do have good samples and recent samples on my website. You can follow me on Twitter at tgmacro. And I would say that covers it. Any of your listeners want to reach out to me directly, I don't mind sharing my emails, tony@tgmacro.com. Any questions, I'd be happy to help you with.
What's your best trade before we cut out for the day?
How do you mean, looking forward? One of my favorite
historical.
Well, I had to be quite honest with you, I was pretty early to the internet bubble, and I listened to a lot of music I was one of the first guys on my trading desk at Goldman Sachs that was having CDs delivered to their apartment so that I could download them on my little MP3 player and go running around the park. Gotcha. And so I was really early to that and able to invest in things that were kind of attached to that world. And I guess quite honestly, I had 2 stocks during the .com bubble that I bought in the single digits and sold over $100.
Wow.
So you had to be in there. You had to be, you had to be a hound about what names were coming out, and you had to get quite lucky, quite honest with you. But
Yeah,
those were really exciting times. It was really unbelievable to buy something.
My wife was telling me that she has a friend who knows Jeff Bezos and basically had to teach him about the internet. And yeah, I hope she stayed in contact with him. All right, Tony, stay with us. We're going to our thoughts for the day. Here we go. So Michael Scott from The Office said, "Would I rather be feared or loved? Easy, both. I want people to be afraid of how much they love me." And Joan Rivers, God bless her, said, "You've reached middle age when you're cautioned to slow down by your doctor instead of the police." Yeah, I got that all right. All right, audience, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm your host, Edward Brown. We'll see you next week. So long.